Well, you better get Ratatouille on the line because your boy is cooked. The market was zigging when I was zagging, and it ended up costing me $30,000. Now, stop me if you've heard this story before, but I was a little bit too oversized, a little bit too overconfident, and I overstayed my welcome a little bit too long. Basically, I was betting against the market, and even though it was going down and at one point I was green, I refused to pull the ripcord until it cost me a pretty penny. And then I did what every good degenerate revenge trader does. I basically went on tilt and made a really big position, and that's what I want to talk about in this video. More specifically, I want to share exactly what was going through my mind, what I saw in the market, the indicators I was using, the data sets I was using, and at the end, I'm going to show you the exact positions that I created and I'm currently swinging. And basically, I'm asking all of you of how cooked do you think I am? Do you think my trade was a good decision that's going to end up, hopefully, fingers crossed, making me money? Or do you think that I'm basically going to have to pay the piper and revenge trading, over trading is going to cost me even more money? Let me know in a comment below. But first, let's get to all those nitty gritty details. The world's largest casino just went dingity ding ding ding, and here is the official headline. S&P 500 closes higher today, Wednesday, August the 6th, as Apple lifts the market. So with respect to the overall market, here's the big picture. Not that far from the all-time high for the S&P 500. Same situation for the Nasdaq 100. In fact, looking a little bit better. And then even Bitcoin kind of joining in on the party, finding support at the 50 EMA. The reason for me showing you this is just to give you the larger context of what's going on as we're pretty much wrapping up summer. Now, for more of a detailed view, here's what happened today. We were dancing around about 10:30, and then the market popped. SPY looking good, Q's looking good, Tesla, nice rebound. And as we saw with that headline, Apple crushing it today. It's actually the largest gainer on my watch list, around 5.1%, but the party didn't stop there. The overall heat map still pretty strong. Yes, there was some weakness in the healthcare sector, also in the energy utilities, but the rest of the ones that most of us are paying attention to looking pretty good. So even though there was a lot of green today, even though there was a lot of bullishness today, a lot of the headlines actually didn't agree. Trump signs executive order imposing additional 25% tariff on India. Trump raises India tariff to 50% over Russian oil purchases. So basically, the tensions related to the trade war not really subsiding as much as most of us would want them to, and it's not just India. Swiss president set to leave Washington without a lower tariff. So the trade news, not so good. Individual equity news, quite a bit better. Apple shares pop 5% ahead of Trump Cook investment announcement at the White House. And apparently right here, Apple to announce another $100 billion investment in American manufacturing. NVIDIA CEO Jensen Huang also expected to meet with Trump on Wednesday today as tech leaders appeal for favorable policies. So basically a little bit of not so good news, a little bit of decently good news, but I think it's this that really the market liked. Trump just got a fresh shot at bending the Fed to his will. Biden's appointee's early departure offers president potential help on interest rates and way to make life hard on Chair Jerome Powell. So basically, one of the voting FOMC members stepped down, which means that there's going to be an earlier opening for the current president, President Trump, to put in a person who most likely is going to be pretty favorable, amenable to what he wants. Beyond the fact that there's going to be a new person voting for earlier, more aggressive rate cuts, obviously it's also going to be putting pressure on the current chair, Jerome Powell. And in reality, you don't have to take my word for it. Look at what the market is betting on. There's currently a 95% chance that we're going to get a 25 bips rate cut at the September 17th meeting. And then if you fast forward to the end of the year, there's a 40% chance that we'll have 50 bips and actually a 52% chance that we're going to have a 75 bips rate cut once again by the end of this calendar year. So what does that actually mean? Well, it means that money is going to be cheaper. And remember, the market, the economy loves cheap money. So there's a little bit of optimism. So there you have it. That's the TLDR of the major narrative going on in the economy and monetary policy and thus impacting the stock market. But that's not the major reason why I made the trade I made today. The things that I base my trades off of are much more measurable. And let me start with the very first one. Let's start with price structure. Here's the S&P 500. And when I refer to price structure, tell me about the highs and the lows. Are the highs getting higher or lower? Are the lows getting higher or are they also getting lower? Obviously, higher highs and higher lows is bullish. Lower highs and lower lows is going to be bearish. And then you could consolidate with lower highs and higher lows. And then obviously you have that disgusting expanding pattern of higher highs and lower lows where price has no idea what it wants to do. Well, right now, with respect to the S&P 500, you can generically see that we have higher highs and higher lows. And one of the easiest ways to track it is to put on the fractals. And this marks out the most recent highs and lows. And you can see that the green triangles on top and then the red triangles on the bottom are both getting higher and higher, which means we are in a bullish overall trend. That is the structure. We have higher highs, we have higher lows. So that is check one. Check number two is going to be momentum, as in, are we above or below the EMAs? And that's also on this screen right now. We're above all the major EMAs, so that is bullish. So we have bullish price structure and bullish momentum. That brings us to number three. Personally, I don't think it's the smartest idea to use highly correlated data sets, which is why my number three doesn't relate to price or price structure at all. It relates to options. On the screen now, you can see today's option flow for the S&P 500. Very quick shout out to Spot Gamma. You could get 80% off. It's pinned in the description below. This is where I get all of my options information from. Well, anyway, the delta's going up pretty much all day today, so that's pretty bullish. But what I like is what I'm seeing right here. You can see today, just for posterity's sake, we closed out at 632 and the Qs were at 567. You can see where we are. 632 is just on the left side, the west side of this right here, which is going to be a little bit of resistance because that's where we ran into today. And no surprise, there's a lot of people positioning there, but relative to the other humps that we've come over, this is relatively small. Really, it was breaking 630. That was the big problem. And then we ran up to this. So what I'm seeing is if the SPY can get above 633, my next logical target would be 639. I should also add that we're seeing a reciprocal setup in the tech sector. Right here, bullish price structure, bullish price momentum in the Nasdaq 100. If we come to the flow today, here's for the Mag 7, long and strong. People were buying. And then when we really dive into the QQQ setup, well, you can see once we get over 564, which once again, we're at 567, there's a little bit of a hiccup at 568. And the next thing I see is 570. So all of a sudden, across the board, I'm seeing bullish in price structure, momentum, and then I'm seeing that we took out resistance in the options world and we have some decent upside. And just to add on a little bit more here, once again, this is just options for the remainder of the week. The yellow is calls, the blue is puts. So today, tomorrow, and then Friday, the end of this week, August 8th, all call dominated. There's calls, there's more call open interest in play for the rest of the week. Another thing, once again, are any of these the end all be all, but I'm just trying to put these all together to really give you the reasoning that I had. The next little piece of this overall puzzle is tracking what the large players are doing, and that's on the screen right now. You can see last week they were net sellers, and then all of a sudden on August 4th, they were massive buyers. They were buying that dip, BTD, and then Tuesday, slight net buyers, and then even today, slight net buyers. So are they buying as aggressively as they did on Monday? No, but they are still buyers. And last but not least, I want to talk about seasonality. If you're not signed up for the newsletter, do it, mattkohrs.locals.com. It's in the description of the video. This is 100% free. I look at the seasonality of each individual day, and guess what? Today, Wednesday, historically bullish. Thursday, bullish. Friday, bullish. I will be the first to admit that are these lights out amazing bullish? No, but it also gives me an idea of headwinds and tailwinds. And right now it does seem as if the bulls are being supported by tailwinds. Alrighty, so before we get into the exact details of the positions that I opened today, let's do a really quick review. When looking at the S&P 500 and the Nasdaq 100, they have bullish price structure, higher highs and higher lows. They both have bullish momentum, as in the price is currently above all major EMAs. Taking a look into the options market, we're seeing the delta continue to rise. And if anything, we've overcome key delta and gamma strikes, as in we took out resistance and we have some room to run. And then obviously it's going to be helpful that for the remainder of the week, the overall option structure is call dominated, as in the call open interest is more than the put open interest. And then also to help our cause, we have large players, as in big institutions, being net buyers for the past 3 days. And hey, it doesn't hurt that the seasonality currently favors the bulls. So when we put all that together, put it in a blender and hit on, I would argue that's a pretty strong bullish milkshake. So with that in mind, I opened up 2 fresh positions right before the market closed. I bought SPY 638 long calls for August 22nd. And then I also got into a leveraged Nasdaq position, TQQQ strike 90 long calls once again for August 22nd. Right now I'm up about 1.6K on the Nasdaq position and I'm down about 700. So net I'm up right now, but who knows what's going to happen in the overnight session. I'll tell you better about how I'm feeling about it in the morning tomorrow. So there you have it. You have my exact reasoning and you have my exact position. So let me ask one thing of you. Do you think I'm cooked? Do you like this trade? Do you like this reasoning? Or do you think that I'm just tilted, revenge trading, playing way too big for my account and have no idea what I'm talking about? I think my reasoning is pretty sound, but who knows? You never know where you might have a blind spot. So let me know in a comment below. Do you think this was smart? Do you think this was dumb? Or do you think it's somewhere in the middle and I should have been considering something else? And of course, if you want more videos like this where I break down my trades in real time, no Monday morning quarterbacking, let me know in a comment. I'm more than happy to make this more of a quote unquote regular video for our particular channel. That's what I have for you now. I appreciate all the good vibes. I'll catch you in the next one.